Welcome to the webinar. This is covering the European Car Distribution Handbook, which we publish each year. This is the 2020 edition, so it reflects the 1st of January 2020, and Pascal will explain a bit more background to that in a moment. We produce it with the help of the manufacturers, so we appreciate the input from all of those in what's been a tough year with lots of demands. It's an open webinar, though, so we've got some participants who are not ICDP members. So I just very quickly like to introduce ICDP. We focus on automotive sales and after sales, so the handbook covers both of those areas. And this, I guess, would count as insight. So what are the size of networks? It's factual information. We'll add a little bit of interpretation to that in the back end of the webinar. We produce various reports in various formats and series of meetings and webinars and so on for our members. We're also pleased that the media, selection of which are shown at the bottom right, seem to value us as an authoritative source of data and insights into the distribution sector. The heart of what we do is the research program. So it's looking typically 5 to 10 years out in terms of the actions that we need to be taking today in order to prepare for that future. We do some consultancy on the back of that related to taking the general research program and making it specific to a particular company or market or scenario. Also use it with some external clients on things like market due diligence and legal support and so on. ECDH is our main data services product. So that sits in the bottom left circle on the diagram. The members you can see on the top right, roughly a third manufacturers, within which we are pleased now to have INEOS as a newcomer to the industry and a newcomer to the membership. We then have about a third who are private distributors or dealer groups, and then a third who are involved either in the aftermarket or providing services and products to the industry like CDK or Carwow, which is another of our recent joiners. So with that, I'd like to hand over to Pascal, and he will take us through ECDH itself, the background, the results, and the implications. Pascal.
Thank you, Steve. Good morning, everybody. Also from my side here from Frankfurt in Germany, I'm really pleased to have the opportunity today to provide some high-level insights from the European Car Distribution Handbook to you. Since more than 20 years, there's actually the publication of ECDH available, and ICDP is doing this task since 2011, as we took over the publication rights by then. So basically, without exaggerating, it's really the most comprehensive European set of franchised sales and service network data, which is getting then updated annually. And it is referring to franchise points. As you can see, it's also referring to the data of the 1st January in each year. In the recent edition, it's therefore 1st January 2020, so it's showing clearly the pre-COVID status. What is included in ECDH? Well, we are covering the network situation for 40 brands in 38 European markets. And we are also considering to add any of the new brands that are appearing in Europe. Yes, there's a lot of analysis, a lot of commentary, and many, many comprehensive data pages included. You'll see what I mean by that in a second. How is ECDH available? Well, it's primarily a PDF product, and the manufacturers, as Steve pointed out, that are supporting us in this exercise, they're getting a free copy, but also it's available as an Excel file with the latest data only, or as data set trend lines since 2007. So we are flexible there, and we are providing this PDF copy at a cost of around 2,750 euros with member discount for the program members. If you are interested in any of the products as we go through, or later or afterwards, just feel free to contact Jane, who will respond to you when you send an email directly to her or to the project office email address. Okay, as I said, we like to give you some brief snapshots about ECDH. Well, let's briefly look at this slide here. it should give you hopefully a feeling of the 500 pages that we in total cover in this report. On the left-hand side, we see here the table of contents, or to be precise, it's really just an extract of this. It includes here the definitions, for example, the key point summary, or there's also a section on the major European markets. And then we have really many data tables in the report. So we provide basically analysis at the total sample level, at a market regional level, and then at the market and by brand level. So for instance, here the by market analysis, looking at the chart, yeah, it's the Austrian sales network. You probably cannot read it, but it doesn't matter so much. We show this sales network with the most recent data according to the categories that we have identified and defined in our ECDH. And then we display the trend of these sales network data points, and we do basically the same for the service networks. And then we have also a network overview chart. So in total, we have on a by market analysis, 5 tables by market. And for the analysis by brand, we are doing a broadly similar approach, and we have further included in that area information on sales company to an additional separate table. So it adds up to 6 tables on a by brand analysis. And based on the sample size, the data charts are really the largest part of this report, as you can imagine. Steve highlighted it already a bit. I would like to come back to that point. We have really long-term and very good relationships with almost all of the manufacturers at European headquarter level, where we then get provided with the data, which we are checking, which we are discussing with them to refine it also backwards if needed for the highest possible data quality, and also to understand obviously the underlying objectives of the changes that we have identified. In many cases, we also get the sales data directly from the manufacturers, but if that's not the case, we source it from governmental institutions and other public sources, as well as the car park data by brand and by market. And we get information on online sales channels and new outlet types as part of our research program activities. So this gets added into the report. Look at some of the high-level results, but before we are actually jumping on the data, I would like to share some of our observations with you first. As you know, now we are covering 40 brands in the handbook at the moment, but we also see some changes to brands active in Europe over time. So there are some new brands arriving at the moment in the different markets, including brands like Link & Co, like Byton, like Polestar, Genesis, or also A-Ways. And because these have no legacy networks, they typically also choose a new or different way of distribution. So picking a few out, well, for example, Polestar, as you know, they are operating their retail spaces, or A-Ways in Germany, they are offering complete online sales in Germany, whilst they also collaborate with the electronics retail chain Euronics. And we are in a regular exchange with most of these, but they are not counted yet in the ECDH. At the same time, yes, some are coming to Europe, others are starting to leave Europe or have announced to leave Europe, such as Mitsubishi, for example, which announced their plan, I think, earlier this year. But also there is Infinity about to leave, and maybe they will be followed by some others in the future, which are struggling even before the crisis now, and they are now maybe in an even worse position, deciding also that Europe could be strategically less relevant to them. And there are many established brands in Europe, besides some of the new entrants, that are then experimenting now with new physical retail formats, with new online channels, and also in some cases with changes to the business model for some customer groups or for the total group. Thinking about new retail models, for instance, Citroën and Skoda, they are experimenting here with these non-traditional retail formats, and they have increased their presence in high footfall locations with these models. For example, in the case of Citroën, they are using this La Maison Citroën concept. We know, it's really hard to make these points operate viable standalone, but they can certainly take a role in the brand marketing activities. The second point to make here is the number of new online sales channels where at least a car can be reserved or fully bought online. That has increased too, especially since the start of COVID-19, and it has really become a strong focus of the OEMs, but also in part for some of the largest dealer groups. Although yet the sales numbers there remain quite low, but it's providing this channel as part of an omni-channel offer is really key to give the customer more freedom in the process. And finally, in terms of different business models, we see that some brands are actually moving to agency. So in simple words, what does it mean? The partners are selling cars in the name and on behalf of the manufacturer at the price set by the OEM as well, and without taking ownership of the cars on their balance sheet. So as you know it, VW are doing it for the ID range. Mercedes is doing it in Sweden for their models and also soon in Austria. And we have identified a lot more of these examples on a global level. But still, the elements mentioned there are not yet completely common, I would say. And the core of the European networks is really consisting of traditional manufacturer networks under a franchise agreement. Okay, let's have a look at the data within ECDH. Please be aware, that here and also in the report commentary, we usually take the relevant subsets of the complete data as we need it. So we are not showing always 100% of the sample for comparison reasons. So looking at the sales networks of the core brands here, which are representing roughly 3/4 of the total main dealer sales outlets in the overall sample. So to be clear about the terminology about main dealer sales outlets, these are the outlets owned and operated by manufacturer or independent importers, plus those outlets that are run by independent dealers. And these are excluding indirect agents who hold a contract with a main dealer. And I remind you again, please keep in mind when we talk about outlets, we effectively mean franchise points. And core brands, when we talk about core brands, they are defined in the footnote. It's effectively a subset of brands remaining in the market every year, which have an overall very substantial weight. Okay, looking at the line now, it shows the development of these main dealer sales outlets, as I explained, indexed to 2010 values. And this is leading to a decrease of around 13% for the core brands. In absolute numbers, as you see, it means more or less a change from 45,000 to around 39,000 in 11 years. So the change is absolutely not as big as you might imagine. If we also look at the curve again, after the financial crisis, the decline seems to have continued, although at a slower rate. And we have even seen growth for some of the market and brand combinations in the sample, which is contrary to the development of a different non-traditional future network structure. Yes, whilst this core brand sample that I just showed you shows a decline by around 13%, the major markets that we are looking at here, they are including all continuing brands, and they declined in some cases slower and in other cases faster. It's really depending on the individual circumstances at the market level. So for instance, we see France and UK declining slower than others. In the UK, it's anyhow the market in our sample that is probably the most consolidated already. So that might not come so much as a surprise. By contrast, the decreases in the Netherlands, but also in Spain or Italy, they have been really much stronger over time if you look at the percentages on the right-hand side. On Germany, which is the red line, well, main dealer sales outlets decreased by around 15%, leading to an absolute number of around 10,600 for the sample of these continuing brands. So clearly, as you see from the chart itself, Germany remains on top of the markets and accounts for around 1/5 of the total European main dealer sales outlets. And why is that the case? Well, these traditionally higher numbers for Germany, they are really relating to a variety of specific circumstances related to this market. It can be partly explained by a mix of the geography and the population distribution, or maybe by the consumer attitudes, not only in automotive, which is more towards buying local. If we look at the points here on the slide, at the first image, it shows here the mix of geography. Well, we see many areas in green, and green is meaning rural areas. And there's also a decent number of areas in orange with towns and suburbs, whilst the very dense populated areas, which are in blue, you might not see them actually. So because there are very few, especially when you compare them to other markets, just like the UK. Thinking about the population spread, it's related also to that more wider in Germany, with many thinly populated areas, but also with more cities you would consider as larger. So the tables here are just showing a snapshot. There are many more cities compared to the UK in the ballpark of around, say, 200 to 500,000 people. And besides these points made, well, the German market is also very special insofar as the registrations are biased by the OEM and dealer self-registrations. And only 35% of passenger cars are registered by private people. So the numbers you can see are to some extent also artificial. And thinking about it, the differences for Germany compared to the other markets, they will have to be taking into account for future network considerations. And I'm sure there are even more than we are now stating on the slide. Another question is then what the network numbers indicate in terms of performance, excluding any hard facts on profitability here on the slide, just coming from ECDH. Well, reflecting the past and the current situation, decreasing networks, which have been also supported by increasing sales volumes, led to an increase in the average sale per main dealer, as you can see over the past years broadly. But still, the sales per main dealer numbers, they remain low in the global context when you compare the numbers of the markets displayed with Brazil, China, and the US, for example. But of course, the market context is also different in these markets. Based on ECDH data, we are now seeing below 330 sales per main dealer across the 34 brands that we analyzed for the sample, with variances by brand and by market as well. So looking at Germany, Germany is achieving the lowest number in the EU5, whilst the situation is in very strong contrast to the UK, displayed on the right-hand side, where the dealers achieve nearly double the amount. Just picking out a few of the other markets, in Italy, there has been an extensive restructuring after the crisis, and the sales per dealer have then risen very strongly in line with the market recovery to now rank on the second position after the UK within these markets. The French sales per main dealer, they remain constant, as you can see, at a broadly similar level of around 350. Belgium is heading in that direction, and the numbers of Spain, they saw a steady increase since 2014 to slightly above German levels. And also in terms of brand types, there are certainly some interesting observations to make. Just one point to point out, the premium brands, they saw some improvement by 1.5% year on year, whilst for the other brand types, there was a decline visible. So overall, the absolute number of this really, it's an indicative KPI. They might not sound that low to you, but there should be definitely room for improvement. And we also looked at sales network changes by brand level that have happened recently. And we made a couple of observations on this chart here. So broadly speaking, the movements have mainly been caused by the brands forming part of OEM groups that have seen some restructuring over time. And looking first at those brands growing networks, if we look at the left-hand side, ranked with the highest percentage increase year on year are mainly the smaller premium brands like the S, like Jeep, with comparatively low sales volume on an annual basis, and also MG. But MG is really special because they had another good year in the UK, yes, but remember, it's actually at the moment the only, or at the time where the handbook has been published, the only market where they are active in. So it's a relative size in absolute terms. It's very small. Looking at the number of brands showing declines in terms of when you count those increasing versus those that are declining, it's roughly 50-50. And the declining brands include mainly players from all brand types. Again, that's related in part to group restructurings. And for some brands in that zone towards the right-hand side, we see the trend to less main dealer sales outlets continuing over time. And that's indicating that there's really something happening. There's a proactive right sizing of networks to align with their volumes happening, such as in the case for Honda, for example, which is happening since many years, but also more recently in the case of Nissan, which have done something similar in conjunction with their partners. And overall, as indicated in the blue arrow here, most brands face changes of around plus minus 2%, which is not that much. And we see similar developments at the brand level, yeah, compared to the market level towards more efficiency in terms of our KPI, sales per main dealer. What we see here, the sales per main dealer for the total sample, there are at around 324 and changed only very gradually year on year. And overall, it also seems when we look at the brands that sales per main dealer changes are broadly reflecting the change of the fortunes of these brands themselves, which means that the growth brands seem to be gaining, yeah, with the exception of Jeep and DS maybe. These two seem to be a little bit special because the sales do not seem to have taken pace with their strategy of multi-brand sales points development into existing dealerships as a way to grow their representation. At the same time, others which are about to leave, I spoke about Infinity earlier, they are showing high declines towards the right-hand side. And the same is also true for Alfa Romeo. They have been hit really, really heavily by a sales drop of 36% across the European Union. I have picked that up from ASEA data, and now they were selling around 51,000 cars, which is meaning effectively they are selling less cars than new Lancia in Europe. Less cars than new Lancia Ys are sold in the Italian market. And that's quite interesting comparison in my view. In particular cases, also there are other brands facing issues in specific markets. Yeah, that's somehow having an influence on the average numbers. And there's also an effect for some coming from the ongoing decrease of new car sales in the UK market. And just a few comments related to the largest established brands. If we look to the left, then we see here with significant positive changes the brand Audi. And in the volume segment, we see positive changes also for Seat, Skoda, but also for Citroën. It will be interesting to see whether they can continue that trend or whether it's more like a up and down year on year. Okay, similar to main dealer sales outlets, we also displayed the development of all service outlets. Yeah, again, referring here to the core brands. And despite a similar but stronger development compared to sales outlets, as you see, it's 19% and not something like 13%. The absolute number, if you look at the circles, they remain much higher to serve the needs of the growing car parks in an acceptable drive time. And this acceptable drive time that I'm talking about is roughly between 30 and 40 minutes, according to our latest consumer survey, yeah, with slight variance, obviously, by brand type. We also saw that the premium brand owners, they are willing to drive a little bit further. So currently, the ECDH core brand sample shows 70,500 service outlets, which is more than 3/4 of the total sample. But we can also imagine that the number of facilities might even increase in the future. For instance, when there's a strong switch happening to new and more flexible after-sales service formats, including the mobile mechanics, for instance. Yeah? Spinning that thought further, yeah, it could actually become reality as part of a revised network structure offered to customers in that after-sales area. And this comparatively stronger decrease that I talked about in service outlets compared to sales outlets is also reflected at the market level. So for the main European markets, we see really different approaches to service networks in general. We see Germany is operating significant number of main dealer service-only outlets, and the market is accounting across all service outlets for more than 1/5 of the European total, so similar as for the sales networks. And at the same time, if we also dig deeper into the data, in Italy and especially in France, these markets are depending very strongly on their authorized sub-dealer networks. And when comparing this then with the UK, well, we could say they operate rather light or lean service-only networks, but instead, looking at the data, we see really a lot of independent dealers operating combined sales and service outlets in that market. Overall, the graph here is showing that service networks across the EU5 or EU7 have seen really quite substantial reduction, looking at the percentages for many markets with a broadly similar pattern to the sales networks shown earlier. Yeah. But we can also note that the decrease seems to have leveled off in the past 3 years. And this is the situation, except from the UK, where the numbers have remained more or less constantly low at over 5,000 outlets in total. We also looked at service data on a by brand level again. So looking at the annual changes here, roughly a third of brands have actually increased their service coverage, which can in part be influenced by multi-brand effects. Probably this is having a slight impact on the numbers shown here. However, the fact that the brands with a growing number of service outlets are mainly smaller brands, which have lower total service outlet numbers, is also illustrating that this trend of growing is actually weaker against the overall picture. So the overall picture is a continuous decline, as indicated before, for most of the brands, including nearly all of the largest manufacturers. If you look at them at the data points towards the right-hand side, you will see that. And we know about restructuring for some brands at individual market level, which is leading either to growth or decline in percentage trends. And we could also imagine that reductions can potentially be considered as an indication of the higher investment need per outlet or investor. So it could be related to dealing with new technology, for example, for servicing a battery electric vehicle. So some outlets might actually be unwilling or not able to make the investment for each of their brands and specialize therefore instead. Just one example related to that, well, we are aware of one brand that is here displayed towards the right-hand side of this chart that has asked their partners for investment in EV standards really a long time ahead of the actual EV launch, and that might have contributed to some being unwilling to fulfill this. If we move on, the ECDH is also including, since 2019 edition, car park data on a per brand and market level. And what we did here on this chart, we analyzed the relevant car park per franchise service outlet for the 4-year-old or younger vehicles of all brands, which are usually the main target group for these operations. So clearly, it's a theoretical number here, because it's not considering the split for after sales work with other players, and that should be kept in mind when looking at the data here. But what we see, it suggests that there's an increase happening over time, because the car parks are aging, because the car parks are growing, although this is happening to a different extent and intensity on a by market basis. So for instance, we see that the situation in the UK is quite different to the other markets, which are more or less similar, and mostly different to the German market. Related to Germany, well, there are really a lot of, as I pointed out earlier, a lot of franchise workshops existing, and the car park is also huge. And we also recognize here, looking at the chart, only around 600 passenger cars per franchise service outlet in this relevant segment. However, the service network in the UK, they have really the structural basis to operate more efficiently, at least in theory, because the data shows almost 3 times the numbers compared to Germany, whilst the UK are only accounting at the same time for a quarter of the German total service outlets. So again, the number gives here some feeling and indication of theoretical potential, but this could be also constrained by the growing competition from the independent aftermarket. So yes, I talked a lot about networks, about numbers, but let's also consider the customer view at that point, when looking forward to potential changes. Considering their requirements, we know from the regular consumer service that we do, they really want an omni-channel process, allowing them to fulfill different steps at the process at different time, at a different format or channel, wherever they want it, in a seamless way without interruptions. And for the clear majority across all age groups, the ideal buying journey, which we ask for, is omni-channel, which means at some point, and yes, of course, this point can vary, and the intensity can also vary for individuals. They would like to do at least one physical dealer visit for one or more of the process steps that they are doing. So purely online is only an option for around 4% of the customers. So a number which remains quite constant over time. Looking here at the chart, these mixed customer journeys, they are all individual, they need to be catered for, and they require really adoption in the main points displayed below, including the topics of network representation and also digitalization, for instance. But still, when we consider now the past development, will there really happen strong change anytime soon? It's questionable. What we did here, we did a very basic 5-year compound annual growth rate forecast to assess how the development could continue up to 2030. As you can see, the declines would really be modest overall, and it indicates that most markets could decline within the same ballpark, so this area in the middle, whilst the rates remain a little bit slower in France and much more extreme in the Netherlands. Clearly, that's just a basic forecast based on the past developments. So the reality will certainly be influenced as well from other factors with an accelerating or decelerating impact, including the pressures like from COVID-19 recently, impact from the ACEs, and many others. But considering the modest overall decline suggested by this forecast, it could actually be a real constraint on the strategic change required for omnichannel. Thinking about putting this in place and operating it in practice. And it also prompts the high-level question whether there's really a perfect time for more substantial change towards omnichannel. Probably not. It just needs to happen. And clearly, there are also exceptional cases happening in the overall trend that I've just shown. For example, this here is a slide on the Stellantis deal, which will likely lead to significant change in representation within a reduced investor pool. And we could imagine also that more mergers and acquisitions and also alliances will follow in the future. The slide is showing the 50-50 merger of PSA with FCA, which is expected to start operating in the first quarter of 2021 under this new group name called Stellantis, actually a word coming from the Latin, meaning brighten with stars, so very symbolic. Looking at the group brand portfolio, it's really enormous. They have 13 passenger car brands in the premium and also in the volume segment. And some of these, as you are aware, have huge networks and operations, and others are selling cars only in single market, thinking about Lancia. Overall, the brands are also very different, and there are very different customer expectations that will need to be catered for. Clearly not an easy task, and we have then enhanced this slide by adding ECDH data, and we see that main dealer sales franchise points for Stellantis now total around 22% of total Europe, which is also broadly in line with their market share. It shows the representation power of this new player, but it also at the same time brings a lot of challenges that need to be managed, such as the broad outlet coverage. And considering to increase multi-brand franchise outlets among Stellantis would potentially be an option for them as a helpful measure to create synergies and also increase the network viability. In principle, we also think that more rapid network change is needed simply to ensure that the dealers remain viable to be part of the omni-channel experience, and also to ensure the ability to invest in the new capabilities that are needed. As you can see, and partly related to the network numbers, the dealers face strong structural issues in profitability, and this has been the case since a long time, even well before the COVID crisis. Based on the average return on sales that we have displayed here, there's a lot of room for improvement, and the averages across our markets, if you look at the data point, there are nearly in every data point case below 2% and even hit negative numbers in some cases, like for Spain and for Italy back in 2012, which is probably related to some impact still from the financial crisis. If we look at more recent data, since the beginning of COVID in early 2020, we see then further deterioration of profits. Not a big surprise, but for 2020, the latest data then that was available then shows dramatic decreases in Italy and also in the Spanish market, where the average dealer is now making a loss, which was not the case in the year before. And there's also a strong downwards trend for the Netherlands and the UK. So overall, it's more than ever really challenging times for car dealers, potentially intensifying the franchise point and the investor consolidation. And I would like to pick that point up briefly as well, because in that area we see quite some movement. with dealer groups taking over others completely or taking over single outlets. And this is partly being encouraged or supported by their OEMs. These actions can then actually deliver synergy benefits in the company results and also help optimizing the network structures locally. What we see from the M&As that are monitored here in the chart, they were mainly involving large and medium-sized groups as the buyers, and we saw quite decent number of deals over time. But clearly, I would like to highlight it's only the deals that we have seen. There might have actually been some more in these markets. Looking at the data, levels seem similarly high in Germany and in the UK, where a lot of takeovers of specific brand outlets or small groups have happened, whilst the transactional numbers are lower in market areas like Italy or Benelux. And in France, we know from our annual top 50 dealer groups tracking that we do, that the groups have tend to grow strongly there in the last 1-2 years there. We also see the highest number of transactions, not only for this year, but also for 2019. So this is related to that. And on the right, just displayed 2 quotes on OEM involvement coming from Germany, but actually they could come from any other market as well. There are the CEOs that have been quoted here are mentioning that the first thing, the OEM encouraged them to take over dealers and outlets in their market area, whilst another group was consulting their OEM how to improve the market area presence and strengthen strategic positioning. So it was a kind of a collaborative approach there. And one could also conclude from that also the OEMs seem to recognize the active part in restructuring that the dealer partners can take. Yeah. To conclude this little presentation today, I would like to get back to this slide here. In our previous ICDP research, we have outlined basically, and you might have seen this, 2 future network concepts with fundamental variants to the business model. And both are therefore also associated with a different degree of change and risk. Yeah, on the one hand, there's on the left-hand side, the dealer of tomorrow concept. It's a fact-based, rather traditional proposal of the future dealer evolution that we put forward. It's implying no change of the business model. So it's evolutionary. And it's also reflecting a strong need for online within an omnichannel retailing system for which shared data is the common basis. And we published this report in I think it was summer 2018. It's available on the website if you are interested in having a look at it. On the other hand, more recently, we developed a clean slate approach, meaning starting a network without legacy systems in place, which we then transferred at a later project step to OEMs with an existing network, which are obviously nearly all other than the new entrants. Clean slate is much more radical. It's a much more revolutionary concept, including also change from franchise to agency, as we have seen in some cases. And there is also more significant change to network structure and cost associated. And we actually see more and more players moving in that direction or considering something similar to clean slate, more than we expected maybe a year ago. Anyway, choosing either scenario to move forward, or maybe choose a kind of a hybrid approach, we will need to see really more radical change in the networks in the coming years compared to this compound annual growth rate forecast that I've shown you earlier, in order to provide a good foundation for an omnichannel retail environment. So this should be happening anytime soon. Yes, and this ends my part of the presentation. Thank you for your attention. Handing back to Steve now. Maybe there are some questions or comments that we can address.
Okay, thanks, Pascal. We've had a little discussion going on while you've been busy presenting. So some questions about the data itself and some of the sort of general trends. We also have a question from Dave Blunt at Lean Enterprise, and he's wondering whether there is a correlation between the service networks and the brands who have extended warranties, so 7-year warranties or similar. So thinking mainly about the Koreans and MG, for example. I know you've not done an analysis of that specifically, but do you have any feel for it as to whether those service networks are more robust?
feeling is mixed, to be honest. It's something we are able to track in the data. It's possible. Difficult to say right now, but I'm happy to look this up for you. That's no problem at all, and then we can discuss on that basis.
My feeling would be that the challenge we would have in looking at the data is that the brands who've tended to go for those extended warranties are also the brands who are that we would call growth brands. So when you've got some spectacular numbers off a low base for MG in the data that Pascal's just shown us, but you've also still got good growth from brands like Kia and Hyundai, and so given their recent over 5 years or 10 years, given their growth, then the park is becoming substantially larger, whereas other parks are relatively stable. So I think that it'd be difficult to separate that one out, Dave. But I think we'll have a look out of curiosity. I think it's an interesting question. We've also got a question here from Patrick. Do we have any projections on volumes and margins going forward, considering the current COVID evolution? So first half of next year. I mean, that's not really an ECGH or network question as such. Obviously, the networks are a factor in dealer profitability, but I think what we hear from the dealers and sort of dealer associations is that the current year 2020 hasn't been as bad as they feared. That the dips in the first quarter, second quarter have been recovered in the last quarter. Clearly, we're now going into a second lockdown in many places, and that presents another challenge. But the other side is that the manufacturers have been constrained on the supply side. So the quality of business has been up, even when the volume has been down. So I think that the outlook for the first half, I would say, is probably more optimistic, and we've certainly not seen a wave of dealer failures that you would attribute to COVID. So I think cautiously optimistic in the circumstances might be the right description for that. It's not to say it's strong, but not as bad as we might have feared. Then on warranty from Dave again, service plans and extended warranties. Yeah, absolutely. I mean, not only service plans and extended warranties as a factor in driving service retention, but also the growth of leasing, which tends to bring with it bundled service. So that's another factor, and one which we see as a very strong trend. Obviously well established in the UK, but also picking up quickly in France and some other markets that traditionally have not had that sort of level of leasing. So the manufacturers can help their service network in that way, but the important point, which Pascal referred to, is they can't dictate the size of the franchise of the service network. If under block exemption, if a workshop meets the standards, then they have to be admitted, and there are one or two who fight back against that, but generally speaking, that's true. So the authorized repair network that Pascal is reporting on here is to a certain extent self-selected by people who see it as a viable business case, and service networks will help. Okay, Jane, have we got any email questions?
I've had some that they want private answers, but I do have one here. Why do you think manufacturers have not pushed through more significant restructuring if the economic need is as clear and as urgent as you say?
First of all, I wouldn't say this so as a general statement. I mean, some actually made significant cuts in some markets, but if you look at the data as we've presented it now, it's actually high level data, and it gets lost a little bit in these averages. So and also other brands have increased quickly the number of franchise points, like Dacia did it through the Renault network, for instance. Still, there's a lot preparation needed for the changes ahead. Maybe it's not happening due to the manufacturers losing market share. That could be one option. Maybe the mindset is also a little bit too much about this traditional thinking around buying behavior, around drive times, and not driven by a data thinking that can show new opportunities to them. Maybe it's also about thinking about the relationship with the network. Actually, it's maybe about trying to avoid worsening the relationship with them, yeah, and in the worst case, causing kind of legal disputes, as we have seen for some cases. That might be some points related to that, but still, it's a clear statement that both and OEMs and dealers, it's in their own interest now to do this collaboration on network right sizing, and it actually can happen, as we have seen also from our experience, but also from the data earlier in the Netherlands, where a lot of restructuring took place recently or in the past, say, 10 years or so.
Okay, thanks, Pascal. We've got another question from Guy regarding the agency model. What would be, in your opinion, the average volumes per sales outlet managed through these agencies to remain competitive? There's 2 points there. The first one is that on agency, as many dealers have said to us, it all comes down to the numbers. So what's the fee that they get paid? And agency in itself doesn't necessarily mean that there's any negative financial impact on former dealers. It comes down to the exact details of the scheme that's put into place. A sort of related question, though, is that when we put the clean slate report together back in January, and that Pascal put an image up briefly in the last slide, we still assumed that you would have a rationalization of dealer networks into larger market areas, the same as we have done for Dealer of Tomorrow, which remains on a franchise system. And as one or two of our members sort of pointed out afterwards, under agency, if you have no intra-brand competition, then you actually remove one of the reasons why a rationalized network makes sense. So the dealers are not necessarily competing with each other, or they're not competing with each other on price, they're competing on service. So there's actually probably more flexibility in terms of volumes under an agency model than, from the dealer's point of view, than there is under franchise. But it does mean that the manufacturer has to be putting the money in through the commissions to support the size of that network, and do so very directly, and taking on all the risk and taking on the responsibility for brand related investment and so on. So that's not a direct answer to your question, but there isn't a magic answer in terms of numbers, but agency in theory is more flexible in terms of viability. In practice, the onus is on the manufacturer. They would have to run those numbers. We've got just a couple of minutes. Why was a strong drop in return on sales in Spain and Italy, where in the other countries it stayed stable? And I'm thinking Karsten at Hyundai is responding to that one, which is helpful. Largely dependent on type and length of lockdown, e.g. service still open or closed, and of seasonality of markets. Pascal, I think you gathered the data from our team. I think
that's the same point that our teams made on that one. I would be very curious to see the data for Germany, actually, where we had a softer lockdown than elsewhere up to now. Yeah. So there might be some differences visible, but Carsten made the point well, what I have heard too.
Yeah, and I think they were first in, the Italians in particular, so they had less time to prepare, less opportunity to look at what other markets had done. So I think that was also a factor. And then Ricardo has just commented on agency, the challenges on the manufacturers: can they supply cars on demand without huge stock? Can they oscillate final price quickly enough to compensate for market oscillations? And the answer, I mean, absolutely right. And they, in the agency work that we've done and we're continuing to do, then those are key questions. In the words of the Mercedes Sweden people, they need to become retailers. They need to think like retailers, not wholesalers. And so they need to have skills that they haven't previously had. And without getting into the specifics of what Mercedes has done, they've done some very interesting things about managing the demand side, and that helps them on the pricing side. But the jury's still out. And the positive aspect of putting the onus back on the manufacturer is it encourages them to actually take a more responsible, if I can put it that way, attitude in terms of stock push, because it comes back and hits them very directly if they do that, because they're holding the inventory, they're suffering the price impact directly of trying to push through metal ahead of demand. I think with that we'll wrap it up. We just got a couple of closing slides briefly. So yesterday we had a webinar to propose the research topics for next year, include some of the points that have been raised by you during this webinar. So that's positive. We will be putting that together into a more detailed plan over the coming weeks. There's still the opportunity to influence it for those of you who are members or who are interested in joining. Then please make sure that you let us know when the webinar material is circulated and you have a look through that. Then please respond to it. If there's something else that occurs to you on rereading it or since the webinar, please let us know. But the theme is making choices, managing risks, because I think everybody understands now that we're in a period when there will be change, and there are choices about how to proceed, whether you're a dealer, whether you're a manufacturer, whether you're an independent after-sales provider, whether you're an IT provider. So there are choices to be made, no choices without risk. And so it's about trying to anticipate and mitigate those risks and making the change successful, whichever direction you actually end up going, because we don't believe that there's fundamentally a good choice or a bad choice. There are choices, and different manufacturers will make different choices, different dealers will make different choices. So hopefully that theme is relevant, and hopefully we won't having to be managing the risks of ongoing COVID pandemics for too much into 21. This is the last event of this year. So when we come back, we've got 2 more webinars in January on looking at supply chain and relationship between insurers and repairers in the crash repair sector. And then probably 1 or 2 other events will get dropped into that first quarter leading up to the spring meeting in March, which will definitely be a virtual event. So that should already be in your diaries, because for those of you who've been on a few of these webinars recently, we've been reminding you of those dates for some time. So please make sure you get them in the diary. And with that, I would just like to wish you a great Christmas when it comes, hopefully a restful break. Not too many of you dealing with the fallout from Brexit. And if you are interested in buying ECDH, then drop us a line and we'll be happy to send you that or the data extract that sits behind it. So thank you very much. And as I say, have a great break. Bye for now.